welcome to the Peak Potential Panel, a 360-degree forecast for the season ahead, and we're going to unpack the economic and e-commerce trends with the experts themselves. To help you and your team prepare to deliver during peak, I'm Fleur Brown, Chief Industry Affairs Officer for Australian Retailers Association. And joining me today are two of our top retail experts in Australia. Firstly, Adelaide Timbrell, and she's the Senior Economist at ANZ. Since joining ANZ Research in 2019, Adelaide's developed deep expertise in household income, finances, property, private sector credit, and is widely sought for media commentary and conference insights. She holds a Masters of Economics, from Purdue and a Bachelor from UQ. Welcome, Adelaide.
Thank you.
We're also lucky to be joined this morning by Wright. He's the founder of eCommerce Equation and co-founder of multiple multi-million-dollar e-commerce brands. That's what we like to hear. Jay's program has helped hundreds of Australian brands scale via high-impact coaching, live training, and a strong community. He's spoken widely on building sustainable, founder-led growth strategies based on data. Welcome, Jay.
Thank you.
We're going to kick off with the economic picture and start with you, Adelaide. Could you tell us, a snapshot of the current economic landscape and what it might mean for household spending this peak season?
Yeah, absolutely. So look, we've had a few hard years, obviously, in the kind of Australian, for the Australian consumer. We've had really strong inflation, we've had higher interest rates, and what this has done is it has pushed down per capita or per person spending in real terms, so the amount of things people are buying, not just the amount of dollars they're spending, down, like every corner. Now that has started to reverse. So we're finally going in the right direction. Now, when you take 10 steps backwards and 3 steps forward, you're still a little bit backwards, right? But we're at least going in the right direction. And so the things that are pushing us in the right direction are, we've got income growth. So wages are moving more quickly than inflation. We've got tax cuts. So there was actually $20 billion a year worth of tax cuts starting mid last year, which until recently was going into people's savings accounts, but there is now evidence that it is going into spending instead. We've got rate cuts. So we've had 75 basis points of rate cuts this year. We think there'll be one more rate cut in November, maybe let's call that a 70% chance. And that also means that for homeowners, so anyone who's in kind of that like family segment of retail, or older, we're going to see some impacts there of that reduction in mortgage payments. The Australian household has been quite resilient through this difficult period though. Household savings have continued to grow. People are actually putting extra on their mortgage. And so it's finally become time where that discipline has moved more into optimism, and we're seeing that in stronger spending.
Great to hear a bit of good news. And staying with you, Adelaide, how do you see consumer shopping behaviour changing this year?
So what has become very clear with consumers over the last few years, and particularly this year as well, is price sensitivity. Even though inflation is actually exactly where it should be, the cumulative increase in prices over the last 5 years means that people are still quite sensitive to it on that day-to-day basis. You know, you go into a cafe and you go, why is my toasty $14? It's just little things like that that do increase that price sensitivity for consumers, because interest rates have been on the high side until recently. We feel that as well. So we're seeing more of a concentration of spending into those sales periods, with a smaller share of spending occurring in kind of normal parts of the year. So that kind of peaks that you see, they're bigger peaks than usual, with kind of larger troughs in between.
Yeah, makes sense. That's great. Jay, moving to you, what are you seeing on the ground in e-commerce when it comes to the lead up to Black Friday, Cyber Monday? I can't believe I just said that, but yes, it's happening.
Absolutely happening. So this year, this is our 6th year of running dedicated Black Friday training and pathways for our members. And I think back in 2019, it was a bit of a fringe sale event. And what we've seen is year after year, it's basically becoming, more sought out by consumers, to the point where I actually think it is the premier sale event. So much so that it's actually completely cannibalised Boxing Day online, in my opinion. And we've really brought forward a lot of that December purchasing and demand into November. And, if you look across to the US is our fastest growing member base. We work with a lot of brands over there, and you can kind of see directionally where Australia is heading, which is just maximum competition. In the US, it's so competitive, it's actually almost hard to spend money on ads during Black Friday because there's just not enough inventory to meet the demand. And so I don't think we're quite there yet, but I think year after year, we do see the competition just being more and more fierce. And so what I'm seeing on the ground this year is just a different level of discipline, strategy and planning required by merchants to actually make sure that they are able to compete and sort of win out against their competitors during this peak season. And most of the merchandising plans have already had to be locked in. A lot of brands are already building momentum for audiences and top of funnel now in advance. And a lot of people are spending a lot of time on their marketing offers and plans already. So I think just a much more robust level of planning and strategy, because Black Friday isn't like any other sale. It's incredibly competitive, and you do need to kind of approach it with a different lens than a typical sale.
Yeah, absolutely. We know consumers are increasingly or still value driven, and what kind of differentiation tactics are we seeing this year?
Yeah, I think over the last couple of years in particular, there's been a lot of training to be resistant to buying full price. And I think that's kind of endured a lot going into this year. But there's still a tremendous opportunity. So I think people aren't buying full price, they're seeking out value. And to me, there is still the opportunity to not just have a liquidation event where you're selling stock. We survey all of our brands at the end of peak season, and 65% of brands last year had their biggest ever profit month in November. So to make it profitable, I think there is a lot of unit economic engineering you can do. Earlier this year, a lot of people were doing merchandise planning, so actually building in unit economic efficiencies from their buying for the peak season. I think what we were focusing on now is actually the offer. When it goes to putting an offer into market, I think a lot of people just think about the discount. But one of our favorite strategies is to actually, give a discount with one hand, but take a higher basket size with the other. And typically you can actually preserve a lot of margin by creating smart incentives like gift with purchases that actually encourage people to spend up, which creates efficiencies per order, because you're spending the same amount on Australia Post for most of these orders, the same amount of acquisition cost. And so you can actually still have a pretty profitable result while meeting the customer where they are and actually providing really good value, but also meeting your own needs, which is to actually have a profitable Black Friday event.
Yes, all of the above. And peak season obviously brings some operational challenges as well. So logistics, staffing, supply chain pressures. How are e-commerce businesses setting up to deal with those challenges?
Yeah, I mean, the logistics side of Black Friday is where all the horror stories come out. And I think that the profile of sale really is different than a lot of other sales. The demand is so strong, particularly in a very consolidated period. 75% of brands that we work with will choose to run a style of sale which basically front loads a lot of the orders. So typically a sale might run for 7 to 12 days over the Black Friday period. And often a brand will do 50% of that volume on the first day and 15% on the second day. So they're almost doing 2/3 of their entire sale volume in a very consolidated period. Not only that, as I just mentioned, we're often trying to push up the units per order. So the actual complexity with fulfilling that volume of orders has never been higher, as well as the volume. So, this is where we've just seen absolute horror stories. I remember 2020 with LSKD doing their Black Friday sale. They, just got into such a big backlog. And they were scrambling, trying to kind of get labour hire in to fulfill the orders, and ended up having to upgrade 20,000 orders to Express Post to get them there by Christmas. And so we've sort of got a lot of scars, and what we try and do is, I guess, teach people the lessons without having to get the scars themselves. And a lot of that really comes down to really accurate modelling and planning, so that you have adequate labour, adequate training of that labour, and make sure that your systems are kind of stress tested and polished in the lead up. Because it is obviously a peak revenue event, but the flip side of that is you will be pushed to your limits in terms of the logistics and operations to fulfill on that revenue.
Yes, absolutely. A question for both of you. Looking beyond this season, what long-term shifts or upcoming trends do you think retailers should be considering and preparing for now?
I'm happy to start. So look, when we look over the next couple of years, what we're seeing is that wage growth will continue to outpace inflation, which means people will actually be getting pay rises that are not eaten up by just groceries becoming more expensive. We also don't expect rates to kind of pop back up after coming down, as long as they kind of stop from November onwards. And that means that people will be able to keep hold of that extra margin in their budget from interest rates coming lower, anyone with an existing mortgage. We've also got higher housing prices over the next couple of years. Now, what that does is it does a few things. For people who are prospective buyers, it means they've got to work harder to build that deposit. So that can actually have a downside for spending in some segments. But then for the people who own homes, they feel richer. And we know when people feel richer, and this is economic data, you know, when people feel richer, they spend more money and they save less. So we actually consider that, you know, GDP will move 2.5% over the next couple of years, add inflation on top of that so you can get like the real numbers, or they're actually called the nominal numbers, 4.5%, 5%, and then consumer spending will actually grow quicker than that because we're seeing that as a real growth sector in the next year or two after a period of real malaise due to that cost of living crisis.
Great advice. Jack?
Yeah, I think long-term trends, sort of Sean mentioned it as well, like AI is obviously the thing at the forefront of a lot of merchants' minds. And I think sort of the two areas that we're really focused on supporting our members with is, you know, leveraging the big tech players. And so a lot of the media platforms have completely retooled. So Meta, for instance, like not just on the ad platform, but even in the news feed, over the last few years, they've gone from a social graph to an AI-led interest graph. So the content that's on those platforms, the way people are consuming is fundamentally completely changed in the biggest way since those platforms launched. And so merchants are now needing to meet the inputs of those platforms. On the ad front, again, you know, it's gone from being sort of media buying led to sort of content led and what's going into those platforms. So I think there's going to be a lot of efficiencies that can be gained by being at the forefront of the changes happening to the big media tech players. And on the other side, I think on the operational front for e-commerce brands, like AI is manifesting in a lot of ways, but all of those ways sort of distill back to getting more revenue per employee. Historically, we sort of saw that number sitting at $300,000 to $500,000 in revenue per employee for most of our merchants. And now we're seeing that kind of expand into the millions. So it's not uncommon to have 1, 2, or 3 million revenue per employee. And you know, Sean mentioned Shopify Sidekick, which you know reduces the need for developers and business intelligence tools. But that's also extending into you know customer support. One of the brands I'm a shareholder of went from 10 customer support people to 4 with the use of a tool, Sienna AI. And so I think really the long-term trend is how are merchants going to be at the forefront. It's a very competitive industry, retail. And so I think the people that are adopting and being at the forefront or ahead of the curve will be able to gain market share. And so that's really, I think, the long-term trend that I'm really focused on supporting our members with over the mid to long term.
Yeah, look, that's a fantastic overview. Thank you, both of you. To close us out, I'd love you to share a piece of actionable advice for our retailers leading into this peak season. Adelaide?
So I just want to start by saying that I'm not qualified to provide financial advice. I always have to say that as a bank employee. You don't want to mix me up with a financial advisor. But I would just say, just because people are getting pay rises, we also know that the unemployment rate is likely to stay very low through the next few years. So most people are going to have jobs. Most people are going to have pay rises. Most people are going to have actually more margin in their budgets. That doesn't mean that it's going to be 2022 again when people just spend whatever on whatever. We're seeing this really big cumulative impact of that inflationary period, which has made people price sensitive. It's going to take a few years for that to wear off. So we can't let income growth equal complacency in this cycle.
Great advice. Thank you. Jay?
I think my actual advice would just be to start now. Like it's, we ran our Black Friday readiness events over a month ago. And it seems crazy to be planning for an event so far out, but the cost of ads between today and the end of November will literally double. So a lot of people are building momentum for the sale now, deploying their top of funnel budgets to build awareness where it's cheaper, getting all of the marketing material and collateral ready now. It's kind of already too late from a merchandising perspective for a lot of people, but I just think really it is not a normal sale. You do need to approach it with a different level of readiness and planning. And so I'd just say get ahead of it. Don't leave it to the last minute like a normal sale.
Great advice. Well, thank you, both of you, Jay and Adelaide, for your great insights today. Don't forget to submit your questions to Adelaide and Jay via Slido below. And stay tuned because up next, Gary will be back on stage and he's speaking to some of Australia's leading retailers about how they prepare for peak.
Let's move.
Choose next day delivery this peak sales season. Speed wins happy customers. Game on. Let's deliver.